Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at the Fibonacci retracement, at its origin, and at how to use it and to apply it to your own charts. Now, I do want to say that I'm not a financial advisor by any means. Anything I say is strictly my opinion on the markets. Now, this video was requested by Bonaparte from Patreon, and here is my Patreon. Feel free to join me and follow me on Patreon. It's a great way to support me and a great way for me to give back to those who support me. So this is a very good platform to submit your requests. We have a separate Telegram chat for patrons only. We have 306 image posts, 30 posts with links. So in total, up to 400 posts already on Patreon, and you get all of those unlocked instantly. We have low cap gems and all that kind of stuff, and help us get to 20 patrons, guys. So feel free to check that out. And yeah, the link is in the description. Now, jumping back into the Fibonacci retracement. So in finance, Fibonacci retracement is a method of technical analysis for determining support and resistance levels. It is named after the Fibonacci sequence of numbers, whose ratios provide price levels to which markets tend to retrace a portion of a move before a trend continues in the original direction. So, Leonardo Fibonacci is a mathematician, or was a mathematician back in the 11th century, and he came up with the Fibonacci sequence. Now, the Fibonacci sequence is basically a series of numbers in which each number is the sum of the two that precede it. So basically, starting with 0 and 1, you have 0 and 1. Okay, so the sum of 0 and 1 is 1. That's why you have a second 1 over here. Now, 1 plus 1 equals 2. You have a 2 after the second 1. Then 1 plus 2 equals 3. That's why you have 3 over there. 2 plus 3 equals 5. That's why you have the 5 over there. Okay, and so on and so forth to infinity. Basically, this is the Fibonacci sequence. Now, all the links are going to be down below in the description, and as well as this site from Investopedia. So how to calculate the Fibonacci retracement levels. Basically, the retracement levels is something to help you understand where the price can come back to before a continuation of the trend. And it's all depending on the trend, whether you are in an uptrend or in a downtrend. You can use the Fibonacci retracement all the same. So, and how do you actually get the Fibonacci levels? Now, we're going to come back to this site in a second. I want to drop into this chart. This is ADA Cardano against USDT. So how do you actually look for the retracement? You go to your indicators, type in Fibonacci retracement, and it should be up. Or on the left side over here, you have your tools bar. And if you go here, so 1, 2, 3. So the third one down, you have Fib retracement over here. I click the star on that, so it adds to my tools over here, all the indicators that I want for quick uses, and this is my Fibonacci retracement. So this is actually what it looks like, okay? So this is how the Fibonacci retracement looks like. If you click it once, you have this settings bar pop up. You can click the cog to enter the settings menu, or you can just double click any fib level and you will get sent into the settings, just like this. So this is how I set up my Fibonacci retracement, okay? So these are the levels that I use: the 0, 0.382, 0.236, 0.5, 0.618, 0.786, 1, 1.618, 2.618, 1.272, 2.272, and the second fib level. I set my background to almost transparent over here. I have my Fibonacci retracement in reverse. Okay, that just flips it to the upside. You don't even have to do that. You can just set it up manually, but I like to have it in reverse. We have the prices, okay, that show on the right side, and you have the levels, the fib levels themselves. And if you go to labels over here, I like to have my labels on the right side, because if you have them on the left, it's kind of hard to see them because of the price action candles. If you have them in the center, it's kind of hard to see because of the price action candles. But if you have them on the right side, that's the best thing for me personally. And we have them switched to log scale, and log scale can be switched in the bottom right corner over here. So you can have log scale on and off. I usually have it on, and when it's on, the Fibonacci retracement will automatically be based on the log scale if you have this this switched on. Okay, so that's for the settings. And if you just take a look at the levels themselves, you have levels from 0 all the way to 1. Okay, so we have 0, 0.236, 0.382, 0.5, 0.618, 0.786, and 1. Now, all the levels below that, the 1.272, the 1.618, those are extension levels, okay? So we're not going to be looking for those levels in terms of retracements, but rather targets, okay? And I'm just trying to explain this as easy as I can because I know it can be very confusing for those of you in crypto, especially the newcomers. So the 0.618 here is considered to be the golden ratio, okay? Anywhere from the 0.618 to the 0.5 actually. So this is sort of your golden ratio here. What this means is when you have a move to the upside, for example, you're moving like this, right? And you start to get a retracement because you can't be moving up forever, obviously. And once you get that retracement, the golden ratio is usually where you come back to retrace to. And from there, you continue on with the uptrend. And then you set a different Fibonacci retracement from this low to the next high. And for example, you get the golden ratio somewhere here. That's where you retrace to and you continue on. And then you set another Fib retracement with this low and this high. You get another golden ratio, and so on and so forth. That is how you determine the golden ratio. And obviously, it doesn't work 100% of the time. None of the indicators do. Some people don't use the Fibonacci retracement. Some people do. I use it all the time because it's great to have extra support levels, right? Because I can take those levels and add them to some other levels that I have, and then see what the picture looks like. Basically, it's just very helpful. And so basically, if you lose this golden ratio over here, once you start retracing, right, you start losing this, you start hitting your head on it, then it is more likely than not, you're going to come back all the way down here to the first fib level where you initially had your, beginning of the move or your swing low, which you usually set your fib level from a swing low to the swing high or vice versa. So hopefully that is quite understandable. And we have our first fib level over here, okay? So how it works is if you start breaking through the first fib level over here, okay? For example, right now our Fibonacci is set with the targets to the downside, with the extension levels to the downside. And once you break through the first fib level over here, let's say looks like something like this, you come back down, you lose this, okay? And you are gonna be targeting the 1.618, okay? Because after you lose the first fib level, that is your technical target based on technical analysis. That's just how it works. And it doesn't mean that you're going to get there 100% of the time. No, but more often than not, you do actually get to the 1.618 after you lose the first fib level. And the same thing goes for the targets to the upside, for example. If we set a fib retracement like this, as you can see now, the 1.618 is flipped to the upside. And this is usually your picture during an uptrend, okay? So you have an uptrend over here, you come back, retrace to the golden ratio, and you break the first fib level, and then you start taking a look at the 1.618. And obviously you do have some levels above, and you can target those as well. But usually when I get to the second fib level, I reset my fib and just find a new swing low and a new swing high, and then start working from scratch over there. And yeah, those are just the levels. Now, I just want to go through how you get these levels, basically, okay? Because it's quite interesting in my opinion. So if I pull out the calculator, so you know how we just looked at the Fibonacci sequence. So if you divide a number to the number that's next to it, for example, let's divide 55 by 89. 55 divided by 89, you get 0.6179, which is approximately 0.618. So you keep getting these levels, these Fibonacci levels, by dividing these numbers. For example, let's divide the 55 by the number second next to it, which is 144. So 55 divided by 144, you get the 0.382 basically, right? Which is a fib level. Okay, let's try 21 divided by 89. Let's see what that gives us. 21 divided by 89, you get the 0.236, okay? So this is how you get these Fibonacci levels, okay? And the Fibonacci sequence can be found all over in nature. So that's why traders like to use it in technical analysis, because, you know, if it's everywhere, then it probably could be applied to charting. And they're not wrong. You know, it does work quite a lot. For me, the Fibonacci retracements are very useful, and that's how I like to set up my targets and set my targets. Okay, so if we were to set up a Fibonacci retracement, so right now, as you can see, this is the daily chart over here. And what is happening is we are in a downtrend, obviously. So you have your lows, right? You have your lower lows, you have your lower highs. So basically, this is a downtrend. So in this case, I would like to set up a Fibonacci retracement with the targets to the downside. So we're going to be using a swing low and a swing high. So I'm going to be choosing this swing high over here. Okay, this is going to be my swing high, and this is going to be my swing low. So we're going to set up a small Fibonacci retracement. Okay, so if you are having your Fibonacci in reverse, then if you are setting it up with the targets to the downside, then you start from the swing high. So basically, this is going to be, I didn't choose my fib. There we go. So this is going to be my swing high. I drag it all the way down so that the 0 level is going to be where the swing low is. Okay, and that's my swing low. Okay, so this is your fib retracement. This is where you have your swing low. This is where you have your swing high. And you've come down all the way down to where the initial swing low was, right? So this is where you came back down to. And you are bouncing up from this level, as you can see. You landed on the first fib level, and from here, you're bouncing up. So the important resistance level that you're going to have is the golden ratio here, because as you can see, when you came back down, when you just started retracing, you consolidated in this area for quite a bit, and then you dropped down. Right? So once you lost the golden ratio, you landed all the way back down to the first fib level, which is where your swing low was, and we talked about that previously. So now, if you are to lose this first fib level over here and start coming back down, you have a couple of levels below, and you should start targeting the golden ratio, or the 1.618. It is often called the golden ratio as well, but I just refer to as the golden ratio to the golden ratio that we have over here, the 0.5 to the 0.618. Okay, but if you start losing the first fib level, as we discussed, you're going to come back down to the 1.618, and that is usually what I target. Now, in a downtrend, that doesn't play out always 100% of the time, but it does happen more often when you have the targets to the upside. Okay, now this was just a short, short-term fib retracement. You can also use the fib retracements for long-term targets as well. So you just simply zoom out, okay, and you choose a swing low and you choose a swing high. So for this fib retracement, I'm going to choose this swing high, okay, and I'm going to choose this swing low. And I'm going to set up my Fibonacci retracement right now. So once you set up your Fibonacci retracements with the targets to the upside, okay, then you start from the swing low and drag it all the way up to the swing high, and make sure you get all the price action on the right side. So just drag it out to the right side over here, and then set your fib retracement. So let's see what is happening over here. So this swing low is September 21st of 2020, and we have our swing high over here, September 2nd, 2021. So this is a year-old swing low and swing high. And look what has happened over here. You made your way all the way to the top. You consolidated around the 786. You came up, You created the swing high, and now you started retracing. You lost the 786, and look where you landed. You landed on the golden ratio on the 0.786, on the 0.618. I apologize. You had a little move to the upside. You landed on it once again. You had a stronger move to the upside, and now you're landing on the 0.618 once again. So this is a strong support level because you even bounced from it over here. The more bounces you have from a level, the more the stronger the level is, basically. So as you can see, this is your golden ratio, and this is where you're retracing to. So from here, it would be smart to start dollar cost averaging. Okay, so this is basically how I use my Fibonacci retracement. If you start losing the golden ratio here, the 0.618, you can start looking at the 0.5 over here, right? Below that, you have the 0.382. You can start looking at that as well. But normally, once you use the Fibonacci retracement on these larger time frames and more zoomed out, the less chances you have of actually coming back down to the swing low over here at 7.5 cents. I don't think Cardano's coming back to 7.5 cents, but yeah, that's just something to keep in mind. And you can use these, at any. You can actually. What I like to do is set up multiple Fibonacci retracements. So what I do is, for example, we have this large one, and I want to set up another one on a shorter time frame over here, and I'm gonna use this as my swing low over here. So this is my swing low, and this is my swing high. So it can be a bit confusing, but you can actually use this to your advantage because you are going to have more Fibonacci levels, and where you, for example, here you have the 1.618 and the 0.5. So here, on the smaller fib, we actually lost the first fib level. So now you're going to have to start targeting the 1.618, obviously. But look what you have near the 1.618. You have the 0.5 from the large fib. So that gives you extra support, obviously. So this means that this area is actually a lot stronger. So this means that if you lose the golden ratio here, which actually is where the 1.272 is from the smaller fib, you can start targeting this area, and you're going to have a lot of support here. So if you come back here, you can start getting, you can bounce from here and start your next uptrend. Okay. So yeah, this is just how I use my Fibonacci retracement levels. It is very helpful, and I like using them very much. And I've actually had some nice trades with the Fib retracement because you actually know where to take some profits and where to set some buy limit orders. That is pretty much it. If I missed out anything important regarding the Fibonacci retracement, then feel free to let me know down below in the comment section. And if you have any questions, leave them down below as well. That is pretty much it. Thank you for watching. I'm gonna catch you in the next one. Goodbye and good night.